Welcome to another session of market analysis. Today is September 30th, 2023, and I hope you all had a wonderful weekend so far. This is going to be a new format. We will try this to see how everything will work out. We have decided to have, for our market analysis Saturdays, to have the recordings, and we will break it down to three segments. So what the segments will be, we'll be analyzing the markets and economy and go over the charts. And every month we have, at the end of the month, we will look at the performance of the different asset classes, which is today is one of those days. It's end of the quarter, actually. And then our second segment recording will be about emerging markets and the lesson of the week, or the lessons of the week. And then the third part will be the trade of the week and the ETF stock of the week, as well as the squeeze and earnings, upcoming earnings. So we will try this format. I will be very much interested in your comments. If you be kind enough, once you receive the recordings, that will be very much appreciated. So let's begin our journey and look at the week that is upon us. This is going to be the first week of the October, a new quarter. September is over, so thankfully for many people, many investors, they're happy that it's gone. As you know, September is the worst month of the year. It's been for the past 100 years. So, and this time was not an exception. The markets were down almost 5%. So, and we had actually recommended, in August, it would be a good time to just take a break for a couple of months, just go away. So anyway, it's done, and October will be a very interesting month because it is a transitional month. A lot of volatility happens, a lot of things happen in October, but it could be a lot of times a lot of new bull markets start, or the new uplegs start in the month of October. So it will be very interesting to watch for. So what is going to be happening this coming week? Well, on Friday, following Friday, we will have the non-farm payroll, or do we? The question is, Saturday evening, midnight, about 12:01 Eastern time, the government could shut down. And by shutting down the governments, if the Congress could not come to agreement, what will happen is, well, there won't be any data for the markets to analyze, including the non-farm payroll, no central bankers speaking. And so basically, a lot of things could be on hold. So that's the reason I put down the question mark in front of a non-farm payroll. The other thing is, we've had this sell-off. We had actually 4 weeks of markets being down, and the markets have had a little bounce after Wednesdays. And then the question is, has this been a short covering? The bounce was, and are we or are we starting in maybe stability and maybe time for actually opportunity for buying? So we will analyze that. The other thing we have noticed that, yes, some of the mega caps have had the correction, a little bit of correction come down. But we look at Nvidia or Tesla, they had Nvidia had a nice bounce, and then we've had like Meta was really flat. So we haven't really seen any tech wreck. And that's a warning sign if it happens. If not, we have the stability, then the markets will continue. And again, this was a quarter end, and a lot of, as you know, a lot of managers decides to work on rebalancing and showing a better side of the performance. So there's again, a lot of things happen at the last couple of days of the month and the quarter. So, but I would pay attention to that tech wreck. Now, in our lesson of the week, we will look at something called fat finger. Now, when we go over the chart of, for instance, silver, we want to see if something like a fat finger happens. So pay attention to that. As far as the economy, we always look at the under the hood economy. And as you can see again, the global commercial flights are still going strong. We got the TSA checkpoints are still ahead of 2019. And, you know, schools are back, so the box office receipts have slowed down. So basically, we also look at the initial jobless claims that still shows that there's a strength in the job market. As far as, again, this coming week, Chairman Powell was supposed to speak on Monday. We shall see what happens. And then a few other FOMC members will be speaking. But the main thing will be the non-farm employment, and that's what we have to pay attention. So we shall see if we will receive it or not. Again, the whole thing is about interest rates, right? So we've had the highest rates in almost 17 years, and we're getting close to that. And are we going to see a 5% 10-year note? The spread is actually narrowing, but we still have the inverted yield curve. As far as the markets go, it was a down market, but we did have a little bounce toward the last couple of days of the market. But still, the Dow was the weakest. They finished down 1.34%. NASDAQ just got flat for the week. And then S&P again, right in the middle. And it was up, it was down about 7.74%. And we can see from the highs, you see what has happened to the Dow Jones. It's about 6% down. So we are not, you know, it's not a lot, but it's still a little correction is happening. S&P is down 6.56%, and NASDAQ is down from a high of July 19th. And just remember that number. So remember August 1st, July 31st, and July 19th. And the reason I mentioned this last week, I mentioned about the sentiment and how the highs and lows happen in the extremes. And you will see on the July 19th, for instance, if I'm not mistaken, we'll visit that. So just remember this number. As a whole, the Dow Jones indices, all the S&P, all the stocks that contained in these indices, they were down about 0.54%. Actually, the mid-cap growth was positive, and the small caps were actually positive. So they actually bounced back, but they have been the weakest. There's been a lot of, distribution. So let's take a look at this as far as our American Association of Individual Investors sentiment. And now we see, wow, there's a little fear coming into the picture. And that's the reason I mentioned, will we see the bottom, or have we seen the bottom right now? And is this a good opportunity to start getting in a long side? The bottom line will be, I will be looking for confirmation. So it's still too soon. But we look at the sentiment, for instance, again, AAII, we see that it is pretty low. We are 10 points lower than historical average, and almost 10 points or almost 10 points above the historical average. So basically, these are from sentiment point of view. We just don't want to keep your eyes on it. And look at this, July 19th, 1 year high, the bullishness at 51.4% was on July 19th. So again, these sentiments actually, they give us at least an edge. Also, it's not just AII, but CNN Fear and Greed is at 28. So we are getting close to that extreme fear, which is under 25. Last week, we were at 29. A week ago we were at 34, and yesterday we were at 20. On Thursday we were at 29. So basically, again, that's a little heads up. When we look at the Citigroup's market sentiment, the panic and euphoria, we are really in a neutral zone. But again, I want to pay attention to where we were in close to that, again, euphoria zone, right end of July. And again, you can see July 31st and August 1st were the highs in S&P and Dow. So again, that's sentiment. So let's take a look at as far as the charts. This is again interesting when we look at the Fibonacci and the moving averages. Again, I've drawn this from August of 2022 high to the low of October 2022 lows. And you can see what we did. We've been bouncing from that. We spoke about a crucial week that we were having this week. We basically wanted to see if this will hold, and we broke down. And now what happened? Thursday, we had this reversal, which again was more of a, at this time, I would look at it as more of a technical bounce. It was oversold, heavily oversold, and also short covering. We see a little wick and tail here. But we did have a bounce on Friday. It was interesting. On Friday morning, we had this bounce, and then we had a late day sell-off. And again, it could be money managers playing games, and also, again, that the government shutdown is in the news. So basically, where did we go? We went to, again, to this resistance, or the high of August. And we also have the 8-day exponential moving average, and it again provided the resistance. So we want to pay attention to that. So the question is, last week we also looked at maybe head and shoulder. Is that a breakdown? We will dig deeper. So just keep those in mind. As far as, again, these are crucial points, important points. As far as when we look at the Bollinger Bands, you can see we had this semi-squeeze going on, and then we have been under the 18-day moving average. We did go outside the Bollinger Band, but we also broke below the 100-day moving average. The question we have to ask, again, in next few days, Mondays coming up, we are embedded. So when we are embedded and it continues, generally all the rallies get sold. So basically right now we've had this little rally, but it was again more of a technical event outside the Bollinger Band. But this 18-day is actually in the process of crossing the 100-day moving average. So it hasn't happened. It could be maybe bounce back up. So it all depends in next week, Monday and Tuesday, what will happen. Again, the markets are nervous, of course, about shutdown. But last week when we shared about shutdowns, that's not really all that bad news in a sense, but it's just the access to the information that, again, there's a lot of government employees will be furloughed. So it is going to be inconvenient economically as well, but the markets generally look forward. So I'm going to come back to this, and this is the last time we were talking at the end of May, in June, when we had the debt ceiling and the negotiations were happening. And once that was resolved, you could see we had a nice leg up. So I don't know if that's going to happen. Would there be a relief rally? But again, this week, it will be interesting to watch. So again, you can see they embedded. MACD gave us heads up right around here. We were just getting really flat. The Bollinger Bands were narrow, and now we have opened up. So that tells us, be aware, there's more volatility coming in. I want to look at on a weekly basis. On the other hand, we can see that on a weekly basis, we are presented by 100-week moving average, which is about 4,200, so 41.98. So would that be the target to go? We are not too far from it. And will that create a very nice support especially coinciding with the Bollinger Bands. Again, the other thing is on a weekly basis, we are oversold, although the MACD has crossed the negative. So be aware of that. And again, the stochastics are oversold. So we could have a bounce, but we also could have a target of that 100-week moving average. Also, it's interesting, again, on a daily basis, we talked about the bounce on Wednesday, that wick. Where did it go? We hit actually the second or two standard deviation on LRC. So that was another oversold. As I mentioned, it was a technical bounce. The question is, can we continue? Can we go and break above the 21-day moving average? A wave is still negative. The C wave is still in the positive side, but once we get these dark blue, that tells us that there's a continuation. So hopefully we will, the momentum could obviously slow down and move the other way. But also in Heikin-Ashi, you see that we actually got a green bar. So that's something you want to pay attention. We are oversold again on the slow stochastics. So this is, again, we want to watch for that. So again, more of a technical bounce, or maybe again an opportunity. NASDAQ is also similar to S&P. We broke below the 100-day, and now the 18 is crossing 100-day, but we did have a doji on Friday. We have moved from again, as far as what is happening embedded, we are moving to oversold. So that oversold, if it doesn't get rejected Sunday evening and Monday, then that could give us a little opportunity, but there's a lot of resistance. So, and MACD is negative. So, and the Bollinger Bands are opening. So we want to look at the weekly, and we see on a weekly basis, we are below the 18-week moving average, but you can see we just touched the Bollinger Band. We are oversold on all the momentum is down, but we are oversold on the stochastic. MACD has been negative, which we had seen it, but this 100-week moving average again could present another support before that. As I said, we have the Bollinger Band, but also take a look at this doji on a weekly basis. So would that mean that maybe we had two candles? Is it possible we could at least go touch the 18-week moving average? Is it possible that we can actually reverse this? So again, I'm looking at we still, I mean, the momentum is down. The A wave has been pretty flat. The C wave has been going down a lot, lose some momentum. But again, we hit that 2 standard deviation with the doji on Wednesday and bounced back, but very close to that 21-day moving average. The same thing in Heikin-Ashi, very similar to S&P. And what we see in MACD, the colors are getting darker, so the momentum has lost, and then on stochastic is trying to cross on a daily basis. So just a food for thought, right? As far as Russell, it's been the week, I mean, it's been ugly charts, but now Russell is becoming oversold. MACD is trying to cross, and we've actually had Wednesday, we had this reversal. Of course, you can see how the Bollinger Bands, they expanded, and now is it possible that would Russell have a little larger bounce, and after 18 days, is it possible to go at least 100 days? There's a big if, and it's a long way, and it's his heavy resistance. But just a thought, because it's oversold. On a weekly basis, again, last week we touched the Bollinger Band, and then this week we're just bouncing off that, and again a doji and oversold on Russell. Dow, on the other hand, looks pretty ugly. I mean, we've been just going down, and we are embedded, and MACD is down. And then basically, when we look at the weekly, we have broken under the 18-week, and we just touched the Bollinger Band. So maybe we could have a little bounce and we are oversold on a weekly basis. Transportation is important. We've talked about that. It was one of the first when we broke down under the 100. On transportation, you can see the 18-week has crossed 100. I mean, 18 days has crossed 100 days, and then, but we are oversold, and the momentum is shifting. So, and MACD is trying to shift. So, let's see if this thing can reverse, or this is going to be heavy resistance, and we will continue the sell-off, which will not bode well for the markets. On a weekly basis, though, we came very close to 100-week moving average. Momentum is down, but we are in oversold. But we have a doji, and we're very close to that 100-week moving average. As far as the VIX, well, it was amazing that we did go outside the Bollinger Band. We were talking about that last week. Just watch out. A couple of weeks ago, I mentioned be a buyer of volatility, not the seller. So we've had a nice bounce. We did go outside Bollinger Band on Wednesday and Tuesday and came back in. And now we are holding the support around that 17 area. So the question is, it goes hand in hand with what is happening in S&P. We have become overbought, but MACD is still positive. So, and then when we look at the VVIX, it's a similar story. We are right on the 100-day moving average, but we are overbought and momentum is going down. As far as everything is about interest rate, right? So interest rates are the one who are the really the reason for the most of the sell-off, the uncertainty, what is happening. And you could see, as I mentioned, it's one of the highest we've been in 17 years. So we did go outside Bollinger Band. We came back in, but guess what? We still embedded, and MACD still positive. When we look at the opposite, when we look at the 10-year, the same thing. It was the Bollinger Band's expanding. We are under 18-day. We've been under this 100-day moving average since May. And what is happening is we kind of not slowing down. We still embedded. You see two dojis, so we kind of bounced off the Bollinger Band, but we still have this heavy resistance. So we are not out of woods, and even more so in the 30-year bond, and we are very much embedded. On a, I'm sorry, on 10-year, on a weekly basis, we're still, under the 18, but very much under 100-week moving average, which, that was a telltale sign. But you go and you look at 2021 and you see that would have given you a heads up as far as interest rates were embedded on a weekly basis. The 30-year bond are similar to 10-year, very much embedded. MACD is negative. We did have two dojis as well. We did go outside and stayed for almost, 3 days, almost the fourth day, and bounced back. But this could be short-term bounces. The dollar has been just tremendous, strong. It was embedded. We are very much in a borderline at 79.9, which is almost 80. Now, if we go below that, then that could mean that we are overbought. So we could have more retracement to the mean, but still strong. MACD is still positive. And then euro is the opposite. We go outside the Bollinger Band, came back in. We are on the borderline of embedded or oversold. When you look at gold, it's been very interesting, has been holding itself well. I know it doesn't look a pretty picture, but with all these higher rates and strong dollar, I would have expected much weaker, but finally it just broke down. And it was not a good week for gold at all. The last 5 days, you can see, and now we are becoming embedded very low. It's almost very oversold. So we might have a bounce, especially we are outside the Bollinger Bands. So let's pay attention to that. But this is not a pretty picture. Again, it's a reflection of the strength of dollar and the higher rates. When we look at on a weekly basis, we've been talking about that. We've been really hugging that 100-week moving average. We've been below that 18-week moving average. and just finally just collapsed. And now we have gone to oversold. So as I mentioned, we might have a little bounce, but technically there's a lot of damage done. I want to take a look at this. This is an unbelievable candle. If you look at it on a daily basis, you can see that there's a big wick. Now, remember, silver is a $5,000 futures contract. This was almost like a $7,000 move from high to low. And something happened. I don't know what. In the morning, we had this big jump, and it went and hit again the upper Bollinger Band, close to that 100-day moving average, passed through the 18-day moving average, and came down. Right now we are oversold, but that was really interesting. And now we are actually below the Bollinger Band. So we will analyze this in our lesson of the week. So I mentioned about fat finger. I don't know, would that be possible? If there was a fat finger, we will analyze that. As far as what is fat finger. As far as the weekly, we are right on the Bollinger Band, oversold. MACD is pretty flat, but we are under the 100-week moving average. We've been back and forth. That 18-week moving average has rejected. There's been a big resistance for us for quite a few weeks, almost a couple of months. So, and then on copper, back and forth, we are still under the 100-day moving average, playing around that 18-day moving average, and we just momentum moved up. We were oversold, so you can see it was a technical bounce from the Bollinger Band and a stochastic. As far as crude oil, I mean, what can I say about crude oil? Again, my prediction from the first of the year has been that we are going to be between 70 and 90. I know we've been close to $65, or it was within few percentage of the 60, and then we've been higher than 90. And this is really the OPEC plus playing games with the markets in a sense. So we finally got to overbought, hit the Bollinger Band, got rejected. So now we are overbought, and we're getting a little divergence here. So we shall see what will happen. Next target would be 18-day. If that breaks down, goes to the next Bollinger Band. As long as they're still playing games, this could continue. But technically right now we need a rest, which is, again, the divergence here. We were embedded, and it was a nice move from the time that we broke above the 18-day, but now that 18-day could be a support. On a weekly basis, you can see basically we've had this really nice move. So on a weekly basis, we're still embedded. MACD is still positive, but we got the opposite of like NASDAQ. You have two dojis on the weekly basis, the opposite way. But as long as, again, one of the problems with the crude oil is it affects the inflation expectations, and again, what the markets are looking at. So you could see that copper is not as strong, and so that's one element in play, but crude oil is affecting. And then now the cooler weather is arriving, so we'll see what happens with that. Now, with that in mind, let's talk about the expected move. Amazing week for expected moves. I ask you, please follow these expected moves. I know sometimes it doesn't work, but it gives you heads up. These option makers, most of the time that's their livelihood, their business. So pay attention to what has happened. I mean, if you were trading and you were playing options strategies, this week was a pretty attractive week for that. On Wednesday, we hit the lower edge of, actually, we went outside, but guess where we closed? Right on the lower edge. On Thursday, we bounced back and moved up, and then we got rejected on the halfway line and came back. But we stayed inside and bounced from the lower edge of expected move for S&P. Well, it was even better picture for NASDAQ. We went right to that expected move and bounced back. When we look at Russell, very close to the lower edge of expected, when it had again much better move than the other indices. And then the Dow, Wednesday, lower edge. Wednesday we bounced, Thursday we bounced back, And then Friday, we just went outside the expected move. It was one of the weaker ones. Again, interest rates in trouble. And, again, the bonds, I mean, the interest rates are higher, way outside the expected move every day. The dollar did go outside and ended up where? Exactly on the high of the expected move, upper edge. Gold was bad day, and opposite of dollar, almost over 2 standard deviation move. And this is, look at this silver move. It's unbelievable. Way outside, came inside, came outside. So it was a really interesting day. In the morning, it went up about 60, 70 cents, and it just collapsed towards, by end of the day. So, and then the financials, similar thing. Wednesday, Thursday, Friday, bounce up that lower edge. Opposite in energy went outside and finally, and then came inside. So, being September, end of September, so as always, we'd like to look at the performances. You can see for the month, orange juice and the crude oil were the two big winners. And then VIX also, of course, in a bad month. So VIX and sugar were big winners. On the downside was the canola, oats, a lot of grains, harvest and season starts. And then, of course, silver, platinum, and then Russell. They were the big losers. But look at the indices. As I said, September, be aware. And NASDAQ was down over 5% and S&P about 5%. So, and gold was down. When we look at the quarterly, again, heating oil, orange juice, and crude oil were the big winners for the quarter. The wheat, VIX, and corn, coffee, and 30-year bond were the big losers, as well as Russell for the quarter. As far as the year to date, we have orange juice almost 100%. That's why you want to have knowledge about completely different asset classes. That shows you how basically they don't all move in the same direction, and that gives you opportunities. You can see, again, we've talked about sugar from beginning of the year, and look at cocoa now. And NASDAQ, obviously, it was up 45%, now it's about 29%. And then once we look at like the VIX, and then natural gas and wheat and corn. So look for opportunities in multiple asset classes. As far as the sectors go for the month, we had one winner actually, and that was energy, and thanks to the crude oil. The big loser was interest-sensitive sectors. Why? Because again, interest rates have been high, so it affects utilities and real estate and technology as well. So there was a couple of things, as we know, with the higher interest rates, it really affects the capital expenditure, and basically also mega cap had some kind of selling, but they're still up 30% in technology. Communication services are up 35%, and consumer cyclicals are up still 21%, although they were down about 5.6. So basically on the performance year to date, what we have is about 4 sectors which are down. Utilities are the biggest losers. So, and then we want to take a look at, as far as the currencies goes, the Forex, and other, again, currencies like Bitcoin. It is the best performer. Again, beginning of the year, we've had that. And then, of course, by March, if you recall, had a big move by the first quarter, and it's up about 64%. You see that British pound to yen is the cross currency is up 15, dollar yen is up 14, and then after that, US Canada is flat, and then the biggest is Aussie dollar, USD is down. So let's look at individual stocks for the month. You see Apple is down almost 9%, Microsoft 4, Nvidia 11. So there's a lot of red, except the energy sector, and then some in the communication, T-Mobile. Other than that, there's a lot of red, and United Healthcare was up. So that's for the month. For the year to date, though, we still have strong performance. That's one of the things. If you look at just the major, and that's why I put tech wreck really hasn't happened. I mean, Nvidia almost 200%, Google almost 50, Amazon 50, Tesla over 100, Meta 150%. So we see year to date, although Apple was much higher, we haven't seen huge sell-off. So what happens if there is a sell-off in these? And these are the big factors that, you know, S&P has been up about 12% year to date. So be aware of that. So watch these. So we want to watch those closely. And of course, the earnings seasons are going to be starting soon. So we want to pay attention to that. For the month, again, S&P was down over 5, and then NASDAQ about 5, Dow about 4. And again, energy was big winner, and inverse ETFs were big winners, as well as volatility VIX and the crude oil. When we look at the year to date, looking at the funds, we see again S&P is almost 24% and NASDAQ about 35%, NASDAQ 100, and QQQ. Dow is really flat, and when we think about small caps are also pretty flat. So energy is up a little bit, finally got positive, and semiconductors are still leading well, about 43%. Brazil up, Japan up. So those are the performance year to date. But again, this 1 month really cleansed things. So as far as the world stocks for the month, you can see again quite a few red globally. Toyota was positive, Taiwan Semiconductor was down, and then year to date, though, there's quite a few green around the globe, except in the Canadian markets. You had some in the banking, some sell-off. So with that in mind, I hope this was helpful. So as I mentioned, I've broken them into different segments. So this is our first segment on market analysis. With that in mind, I'm going to stop the recording, and we can then you will have access to this, and then we will work on the lessons and emerging markets. Thank you so much.